This tutorial is going to focus on creating the balance sheet from the worksheet. So we're going to take all these amounts from the balance sheet and we'll click on the balance sheet tab. At the top of the balance sheet, make sure you have company name, balance sheet for the period ending and the date. This is March 2008. Now we start with the assets. That's the top half or so of the balance sheet, and we'll list all the current assets first. For example, bank. The bank amount goes right there. If we go to the worksheet, we'll see that that amount is $15,099. So we put $15,099 right there. Accounts receivable is on the worksheet 21,625. So 21,625 goes right there, and we subtract from that the allowance for doubtful accounts. So back to the worksheet, allowance for doubtful accounts is a $420 balance. So we'll put in here negative 420, or put brackets around 420. And so we add those two amounts, and that goes right here. So this would be the sum of this cell plus this cell. And we need a solid thick bottom border there. Next goes merchandise inventory. So back to the worksheet, the ending balance for the merchandise inventory is $55,124. So that will go right in here, 55,124. And then supplies. Under supplies, we have a $10,600 balance. And we add all of those and put that amount over here, and that'll be our total current assets. So this is the sum in the C column from row 8 to 12. So $102,028 is the total current assets. Scrolling down a bit, so with fixed assets are things like building and equipment. So for building, we need to go back to the balance sheet, the worksheet, and building is $128,600. The accumulated amortization is $30,500. So we'll put those in the first column. So it was $128,600. And now we're going to subtract from that the accumulated amortization, which is $30,500. Put a nice thick bottom border there, and in this cell goes the sum of these two. And that's all the fixed assets we have. So the that amount then we would put right over here. So our total assets is the sum of these two. We'll put, of course, a thick bottom border right here, and we'll add the two of those together. So the total current plus the fixed assets. So that is, and of course, underneath that one, we want a double row. So $200,128. Now we get to the liabilities and owner's equity section. Under current liabilities, the first thing we have are accounts payable. So back to the worksheet, and accounts payable is the account 201 here, which is $3,200. So we'll take that amount under the balance sheet, and that goes in the middle column right here. And for some reason we don't have the right formatting. Raw number, not currency. There we go. So 3,200. Now GST payable we need next. So GST payable is $1,850, and we're going to subtract from that the GST recoverable, which is 1,000. So we would put the GST payable, the 1,815, and we're going to subtract from that the recoverable was $1,000. And we'll sum the two of those and put that right over here. Thick bottom border there. So this would be the sum of this cell plus this cell. Now Gst Payable, back to the worksheet. Gst Payable is the $6,288. So that amount would go right here, 6288. And so nice thick bottom border there. So the total current liabilities is the sum of these three. So we just could use the auto sum feature, or just add the three of those together. And oh, I have it in the wrong space. That's supposed to go in the third column. This plus this plus this. There we go. That's supposed to go over there. Okay, long-term liabilities are the loan and the mortgage. And so we go back to the worksheet. The loan payable is $29,100, and the mortgage is the $78,360. So those two amounts go right in here. So $29,100 and the $78,360. And we sum the two of those. We'll put a thick bottom border there and put the sum right here. So this cell plus this cell, $107,460. Now we have the capital, equity at the beginning of the period. So capital, and I noticed it didn't change, 90,828, 90,828. So we'll take that amount and put it in the middle column right there. Now we add in the net income. Remember from the income statement that was 22,670. So 22,670, and we'll less the drawings. Drawings were 31,168. So we're going to subtract that. And nice thick bottom border here. We add the two of those, and that amount goes right over here. So that would be the sum of this and this, which of course is negative because the owner took out more in drawings than the net income for the period. And so nice thick bottom border actually for both of these. And so we take the 90,828 and add to it the 8498, or subtract 8498, and that amount goes out right here. So this cell plus this one, it's a negative, so we can just add them. So that's the increase or decrease in equity. Is the 8498, so the equity actually went down almost $8,500. And I have this in the wrong spot here. This should actually be right down here. This cell plus this cell. So that's the equity at the end of the period, $82,330. So the total liabilities and owner's equity, and I just noticed I have a mistake here. Goes right over here. So we add these three amounts equals this plus this amount, and we'll put a double line underneath that. And so notice that $200,128 is the same as the total assets up here, and perhaps we can see more on the full screen. Not quite the whole thing, but close. So that, remember, total assets must be the same as total liabilities and owner's equity, and that's how you create the balance sheet.